Hello, everyone. Um, I'm sharing with you some of my MBA materials so that you can understand, money matters and not only how you build your own business, but also evaluate other business. The reason that we want to do that is um, it's probably more relevant for you to evaluate other business than evaluate your own business, because very few actually eventually end up running their own business, but all of us at some point in our life will have to invest, or we'll have to find where do we put our money, because for all of us there's something called the opportunity cost. Opportunity cost means that if I don't do this, what do I lose? So that's your opportunity cost. So for example, if you don't invest or if you don't do your business, you can actually invest in a regular healthy market and making 8% per year, right? If you look at the US market since 1920 up to now, the growth is 8% a year. So in that case, if you run any business, not only when you run business, you will sometimes you will take a loan for 5%, sometimes even 10% a year, and then you make some profit. So by doing that, if you don't, in that case, if you don't make 18% a year, you better just put your money somewhere else and let the market make money for you, right? So you need to consider your opportunity cost. Um, so you, so that's why not everyone is in business. So if we are in business, or if we are running our own business, or if we are looking at business, how do we know, how do we evaluate? We evaluate a business through different ratios. So ratio is just kind of like a fancy name for percentage. What's a percentage? So we will look at all sorts of percentage. And how do we calculate the percentage? By putting something and divided by a different number. So for example, if we look at this, either is our own business or some other business, we will look at earning per share. This is very interesting. If you look at any stock you are going to buy, this is one of the number one you're going to look at it. You bought 100 shares from Neclet or from Uridu, right? And then you want to know how much that one share is making for you. The company is making their profit per share, the earning of the whole company, and then the share is a million share, right? So the earning, if it's earning is 1 million real and a million shares, so it means one share is making 1 real, for that company. For your own company as well, you look at the earning and see if it's making sense to invest. So that's something. What is this? This is your income minus dividends, preferred dividends, and the ordinary shares issued. By the way, does anybody know the ordinary share and the preferred share for any company? The ordinary share is ordinary people can buy, yeah? The preferred share is not everybody can buy. Sometimes it's a selected a small group of people that they can buy. They will buy the share before the share goes to on sale to everybody else. So for most of us, we only buy ordinary share. We were not in the little selected group to buy the preferred share from that company, yeah? If you are a cousin of a CEO of Neclet, I don't know, you might be offered the opportunity to buy the preferred share. So I'm just telling you, it's not important all of this. It's important that you understand the logic of business, and you understand when we read something. This is my trick is, when I read something really, really in detail. I understand any nuances about this, and if something I'm not interested in reading, then let's skip not to read altogether. So read this. Net income is a company's income, right? How much a company made, minus the preferred dividends. The dividends is whatever the money that made by that little preferred group of shareholders. Yeah. So that's their, so you would use the net income minus the preferred dividends, And then all of this is the money that's in the pot that's shared by all the ordinary shareholders. Yeah, so that if you use this minus the preferred, that's a small group of preferred shareholders, yeah, and minus their share, and then this is for everybody else who owns the ordinary share to divide the profit, and then you got the earning per share. So that would be how you evaluate a company. Okay. And moving on to some other, so if this is interesting for you, and if this is something you could understand, then it's possible you would consider for MBA in the future, because it's actually going to be helpful for many of you, if not all of you. Actually, all of you, yeah, would be all. Mhm. This is with London School of Economics and Politics, I think. Yeah, it's called LSE. It's an online program. The London School of Economics, yeah, and Politics, yeah. Mm. So, price earning ratio. There's all this that I believe. Let's just read something that to see if we understand. Yeah. So let's read this formula right here. Whenever you're reading or you're thinking, you read and you tell me, do you get something out of it if you just read? So this is called the dividend payout ratio. Do you know what is a dividend? Has anybody bought any share? No. Did your grandpa give you any share from the company? You're still young, but this would be useful in the future, or very quickly. You know, as soon as you start to collect the paycheck, you would think about where the paycheck would go. Um, it's a dividend that's giving to the shareholders. Earning per share is normally more than the dividend, yeah, because we always, as a company, make more money than we give it to the shareholders. Yeah, so we sometimes make more money, we don't always give it to the shareholders, right? So the dividend is the money that you give it to the shareholders. Yeah. So what is the dividend payout ratio? If anybody read, yeah, what is this?
The money you give divided by the money you earn.
Correct. Perfect. Yeah, you read the formula, you understand. Yeah. So the company made 5 real per each of the share. Let's say I have 1 million shareholders, right? Uh, they hold 1 million shares, right? And not 1 million shareholders, 1 million shares. Each share company made 5 real, and 2 real they give it to the shareholders. The 3 real they keep. Yeah. So the earning is 5 per share. The giving as a dividend is 2 per share. So 2 divided by 5, 40% as a dividend payout ratio. So why do we need to know this? No, not for interior seniors, but once you leave university, you got so much money in your bank, then it's really time to think about it, because not all the company will give. They might, for example, some company make a lot of money, right? But they don't always give it to the shareholders. Yeah. You understand that, right? You can also it's the same when you run your own company, you made a lot of money, you have some shareholders, either as your partners, they're all shareholders anyway, right? You don't just run one person company. You got 3 friends, 2 cousins, everybody form together a company. Sometimes you made money and you don't distribute the money. You want to continue to invest in the money. If you give it to the shareholders, yeah, your cousin, 2 cousins, 3 friends, then those you can be considered as a dividend. It's the same concept, right? The rest of the money you keep to continue to run the company. But why do we want to know this? Because we want to understand the money. If you really don't understand the money, you should not consider to run a business, because it would be harmful for you. It's an opportunity to lose money rather than. That's true for many people, unless you really have a very good understanding about money. Otherwise you don't just run business. Okay, so let's look at some other. Okay, this is one of the ratio you probably should all know, right? So it's called the gross profit margin. Okay, I'm just reading things and try to explain one by one and see if we get something. So what is gross profit? Sorry, not cross. I'm reading as gross profit. Yes, correct. And this and yes, correct. Normally, your profit would be bigger or smaller than the sales. No, smaller. Yeah, because your sales is like I'm selling my magnet at 10, my profit is only 2. Yeah. Yeah, even the gross profit without my utility bill, running my car, petrol, and all of that. Yeah, the gross profit that's always smaller than the sales. You cannot make 100%. You always have other costs, other stuff. Okay, so that's that. So why do we want to know this? It's because we want to know if we sell this much, how much profit we can make. Yeah, and that's true for other companies as well. For interior company is the same. You always have sales. You don't sell magnets or furniture. You sell the whole design. Each project you have a 1 million that as your sales, the whole payment is 1 million, but doesn't mean you will make the whole million as your profit, right? Your profit is only certain percentage. And that's true if you're in hospital design, if you're in residential design, or if you're in retail design, and that there's a benchmark for that industry or for that sector of the industry. If you're doing kitchen design, your what we call the gross profit margin is limited. You cannot charge too high because other company are charging at the relevant whatever percentage that's proper for the market. So your margin cannot be too high. That's why your margin is sort of like a constant. So in that case, if anytime you have a million project, you know how much you can make because you know the margin, right? So if my margin is 20%, which is whatever the profit I can make against my wholesale, yeah, if my margin is 20%, you have a million, how much do you make as a profit? 200,000, 20%. Anyway, get your machine going. It's not a good time for Monday morning, not a good time for, but this is why we are learning, because we're learning to understand the business. Okay, so yeah. So probably, unless you really want to run your own business, you probably are not going to be that interested in the concept, which I can agree. Yeah, but that's the business class. So so the next ratio is what we call the current ratio, which is also an interesting concept. I probably would just conclude here to bother you with all this ratio, but I want you to think about it, in the future, when you start to run your own business, if possible, or when you look at the other business, you look at the ratios. That's the only thing you would probably remember from this class. You would evaluate them and see which one is a better business, or you evaluate, of course, more than ratios. So here is the last ratio we're going to talk about, is called the current ratio. The current ratio is a, so what is a current ratio? Because you sort of learned from last class. Yeah, so what is it?
It's when your assets, such as like land, like permanent assets like land, machinery, is divided by like liabilities, which like liabilities are like loans, in which you have to like pay back. So like your own personal belongings divided by the renter's belongings.
Very close, very close. Yes, Kumasha. Mm-hmm. Yeah, that is also very close. Both are very close. I think for Mana Hill, there's one thing you were wrong because you were not talking about the current assets, because you're talking about machinery and all of that. That's not your current assets. That's your fixed assets. Current asset, I'm just talking about current assets is something that can be quickly converted to cash. So which means non-commercial is right, is how the ability to pay back. That's this ratio is measuring that whether you can pay back, whether you have 5 creditors all chasing money. Maha, where's the money that you promised to give me back, my million real? Okay, you look at your money. Oh, I don't have that much money. Okay, so but I have all these chairs I can sell, quickly sell, at a discounted price. Then that, because the chair for any interior company, that's your current assets. Your current assets has a couple of categories. Cash is always current because it doesn't need to come to be converted. It's already cash. Your inventory that you can quickly sell, that's kind of a like a equal of cash. Yeah, sort of a similar to cash. Machinery, no, you cannot quickly sell machinery or the building that you bought. So you need to understand the difference between the current assets and the fixed assets. Fixed assets, you're tied up with them. Okay, it's your permanent investment. You cannot quickly convert them into cash. Your current assets, which is like inventory or account receivable, is your current asset. Account receivable means the money that the people promised to give it back to you, they haven't paid yet. And if you chase them with a few phone calls, you will get that cash back. So yes, it's ability to pay and is your current assets against your current liability, not your long-term liability. If you have a 10-year loan, it's not current. Yeah, if you have a 1-year loan, it's rather current. So current normally is like whether something can, is sort of like 1 year is the limit for current. So if it's beyond 1 year, if you take a loan for 10 years, 30 years, that's not your current liability. That's your long term. So if you take a loan for half a year, yes, that's your current liability. You have to quickly pay them back. So the current ratio is your current, is your ability to pay back. Yeah. Okay, I'm just going to ask you to do a case study. Yeah. Another opportunity to do case study. Yeah, this is about the business. I'm looking at, for example, I found something. Okay, this is already with you. Is in your folder, which is let me see, where is it? M&S. I think it's here. Yeah. So here is in your business class folder. So you could study this company and read. Okay, read this. This is, by the way, Marks and Spencer, right? You see this company. And after my study, I learned that they're a little bit suffering in recent years, because if we don't look at anything else, we just look at this. Basic earning per share. Yeah, if you're investing, then you realize that maybe I don't invest in this company. Look at the negative, 70%. Lost the 70% of its earning per share. Yeah. So used to make 1 real per share, now only make 30 dirhams, lost the 70%. So, and all of this. So there's quite a bit negative numbers, but there's also promising stories. So they clearly changed the CEO, and you can also understand that this is in the future. If you analyze anything, if you try to analyze VCU, you can also analyze VCU as the business. Anyway, sometimes when we join a company, we're just a little small, very insignificant to that company in a way. we're not making big decisions as a CEO, but you can look at the company and where the company goes, where the money goes, and in relevance to yourself, and then you can understand. And if you're very savvy, then you would understand a lot of more things about how each company functions, and whether you should even be committed to that company, whether that company is making very good decisions or really bad decisions. Yeah. Okay, so let's look at something. For example, this is your other study that you can do, that I was looking at. Okay, this document. You can now find this document just by a Google search. I was looking at Amazon, some other companies. So this is basically the Amazon version of the same M&S. That they would talk about their company goals, company vision, and especially when they make money or not, which I have not browsed to that page. I'm going to just keep reading and until I see it. So maybe I would download this and just look it on my own. So this would be one of the other business that you could do. Is you study about the company and then you say whether this company is good or not. And for some of you are interested in numbers, for example, you can really compare, like I said, Microsoft and Apple. You can compare and look at their current status. And I think that's interesting to learn. Okay, here is the table that you want to read. Are they doing better and better or worse and worse?
Better.
In terms of?
Shares?
Yeah. In terms of? Yes, good. Growing. And what about the profit? Let's look at the last item as a profit. Are they doing better? Where is the profit? That's a cash flow. Net income or loss, yeah? So in this year, is it positive or negative? Profit or loss from your reading? Yes, correct. Because it has a parenthesis, yeah? Very good. And then now they're making money. Okay. But you can also look at the, let's say you're doing this, Amazon compared to Apple. What you can really do, which you can all do, yeah, because they're a public company, all of their financial information should be public. So we can look at their profit and we can look at the numbers, basic earning per share. Now you can really understand why I've been talking about earning per share. If you suddenly woke up, then you understand what I mean, because this is the number that you're looking whether you should invest. Number one number, yeah. I don't say you have to look at only this number. There's so many other things, whether a company is going upwards or going downhill. That's even more important. Or whether the whole industry is going upwards or downhill, So, so do analyze and imagine that you are the investor. You can invest in any things. And in this case study, there's many things you can do. You can compare two companies and you can compare their earning per share. Yeah. So what's the earning per share? If we read 20, probably $20, yeah, earning per share. And then you look at the price of their share, right? And then you know how much it's making, right? Agree? Yeah. So you don't just look at this number, earning per share, because how much is per share, right? That also matters. So you can look at some of the numbers and, basically give very, very sketchy idea of whether you should invest or not. Two companies, do a comparison, or think about another thing is which industry at the moment is going upwards. Like really, in 5 years, this is going to be the money-making industry, is really taking a speed. What are the industry up there? Any idea? Anywhere.
I would say clean energy.
Mm-hmm.
Companies like Tesla, for example, alternative energy.
Yeah, that's very good. Okay, some ideas, some ideas. Imagine, because I know most of us don't have too much money that's in the pocket that really urgently need to invest. Yeah, so we don't have that problem at the moment. But some people do. They have a lot of money. They really needed to quickly find something, or find something that really is good investment. Not non-typical, which sometimes you would invest in some kind of a startup, yeah, or an industry that's moving upwards, or industry that's very sustainable, that is keep making good income for people, like pharmaceutical companies, making drugs, making medical supplies, or any industry that you're interested with, and give it a little bit of thought if you're interested in that topic, not for now but for the future. Okay. And also, one thing I was very, very fascinated, I wish one of you would do that research, which is about the blockchain. Yeah, so I'm sure you all heard about the blockchain, and a while ago, Bitcoin was so much hot, topic, and a lot of people probably lost money if they were catching up the last little bit of the increase in the price, because oftentimes the little investor got cheated, because that's the one the big investor wanted to retrieve from the market. Then they tell everybody, you really should invest in Bitcoin. I heard the Bitcoin when it was like $700 per piece, per coin, because Chinese investors are very interested in those things. Yeah. And we also need to question why people are interested. By the way, do you know that sometimes ISIS, sometimes whoever, when they try to do some transaction and to try to hide their transaction, they look for alternatives. And Bitcoin is one of them. Yeah, so we understand those, but also understand what is blockchain, and all this digital currency that may come up to the market. Do you know that Facebook was planning to release their own version of digital currency, and what is it called? It's called the Libra, Libra. Yeah. So think about those things. By the way, it's still debating. The Congress is still debating. I think the Congress. I'm not following actually. Every little nuances will not pass this, because the Congress think probably is not a good idea, because they're taking over too much control, and the digital currency can take control over the world. That's my opinion, because they can get rid of all the currency that's in the market, like the dollars or the Japanese yen or the euro. Or so how do they do it? Probably through a technology called the blockchain. Yeah, so investigate on that. That's a very interesting topic. It would come out very quickly, and you want to be ahead of the game, at least understand what is going on. I'm not recommending people actually invest in those things, but also a lot of things involved with money is your privacy about your money, because when you use a Visa card, people track where you are, what you spend on, stuff like that. So I want you to all together think about whatever that interests you. I know Faja is thinking about something, or maybe suddenly woke up, because think about the money and the story behind the money, even whatever the story, even conspiracy, you know. I don't know. Whatever that intrigues you, you should think about it and find a topic that is really interesting as your research. Yeah. So today, what we did is we learned a lot of boring ratios, but when you see it, when it's in action, it's actually can be quite useful. Yeah. Especially when you have too much money to worry about. You know. Um, and we discuss, or give me some ideas what you're thinking in terms of your money research. Any ideas? Someone were nodding or thinking? Someone is going to take on the topic of blockchain, because you're not doing that research for me, you're doing research for yourself, because you want to be ahead of the game and understand, what is going on with the world with all these money stories, and who is planning what type of who is planning what. Yeah, the big players in the market, like Facebook is certainly a big player. What about their version of currency? What about the Libra? What are they trying to do? What do they really trying to do? Are they trying to control the world or not? Yes. Okay, then do a research on it to convince me, because I'm still confused.
Is this still related to, for example, Baladna, how they're trying to make all companies that use cheese, milk, and stuff, they want them only to use Baladna, so it's becoming a monopoly?
Yes.
Is this related to it in a way?
If that's your interest, yeah. I mean, monopoly, yes. All the money is always looking for monopoly.
Yeah,
Power is always looking for monopoly also,
basically what they're gonna do recently, or they passed the bill already, is that
About the milk, yeah, or the milk business.
all dairy products are gonna come out of Baladna factory here.
Yeah.
Nothing's gonna come from abroad.
Yeah.
So basically, all like the Knappa, the cheese factory,
Yeah.
everything's gonna become the same.
Yeah.
So I feel like that's gonna have a huge knock-on.
Yeah. If that's your interest, by the way, I'm going to stop my recording, because yeah. Okay. For people who are not in the classroom, I'll see you next week or Wednesday. If you have anything that you wanted to discuss with me,